This is going to be the Chapter 2.6 video for Business Econ. This is going to be basically tying together all the stuff we've been talking about with the past few days about kind of the deductions that come from payments and kind of putting it all together. So we talked about all the different payment deductions that could be made: health insurance, Social Security, Medicare, state, federal taxes. This is just going to be kind of what happens when you put them all together and kind of time it all in one last move here. So like I said, we would talk about these various taxes here. We have federal, we have state. Remember, federal income tax had two versions of it. They had the table and they had the percent method. Okay. For state, again, it was either a flat tax or a graduated tax. Medicare and Social Security were the same all through the time. There was 1.45% for Medicare and 6.2% for Social Security. Social Security had the extra tag as it does not apply to anything past $97,500 in 2010. Remember, in 2019, this is actually a lot more. But for right now, in 2010 at least, this did not apply to anything above $97,500. So you were taxed at maximum for $97,500, and anything past that wasn't taxed for Social Security. And then health insurance we covered is usually a split between the employer and the employee. So the employer covers some things, the employee covers the rest, and that's where you get their health insurance costs from. So we're going to put these all into practice here, and we're going to work these problems. Again, we've gone through these pretty much individually pretty well, and so we're just going to hopefully have a nice smooth transition. So this person's gross weekly salary is $600. They say that they're married and claim 3 allowances. State tax is flat 1.45% or 1.5%. They pay the standard Medicare and Social Security, and their insurance comes to be $28.40. So they actually give me the flat insurance cost here. So they say that instead of doing a percent method, they just tell me outright what they're going to pay for health insurance, that $28.40. So there's a lot of numbers here. So let's go ahead and point out here. So we have $600 weekly salary. So we have 3 allowances. They are married. Flat tax is 1.5%, and then we have Social Security and Medicare tax as well. And then again, we have their health insurance number here. So let's go ahead and list out what's happening here. I just prefer to list out all the deductions first. So we have the federal tax, FIT. We have state, which is SIT. We have Medicare. We'll put M for Medicare. We have Social Security, SS. And then we have health insurance. We'll put H for health. And then that's about it. So let's go ahead and figure these out one by one. So federal income tax. So they're married and they claim 3 allowances. So we'd use our tables in your book. So for Jeffrey there that doesn't really remember, remember it's A3 or A2 to A5. And again, we're looking for married couples. So this would be on page A4 in your book. You're looking for, if their weekly salary is 600, that means you're looking down the left-hand column there where it says at least 600, which is pretty far down below. It's the 600 to 610 range. And it says that they claim 3 allowances. So if we look down that row there, and for 3 allowances, let's say that's 0, 1, 2, 3, be 26. So $26 in federal income tax. SIT, well, that's a 1.5% flat rate. So we're going to take 600 and times it by 0.015. So let's go ahead and take 600. Oops. 600 and times it by 0.015. And we get $9. Not too bad. Medicare and Social Security. So remember, Medicare is a 1.45% tax. So 600 times 0.0145. So let's go ahead and solve for that. So 600 times 0.0145, as I say in a not sassy manner. So that'd be $8.7, $8.70. And again, that is a 5. That looks just like a 5, not a 3. There's no way that anybody can misconstrue that as a 3. That is indeed a 5. Social Security tax here, remember it's 0.62%, or sorry, 0.062. So 0.062. Multiply that through here. So 600 times 0.062. We get $37.02 or 20 cents. And for health, we don't need to calculate anything. They just tell us it's 28.40. So they do all the calculation for us, and they just tell us outright that it's 28.40 a week. So these are all the deductions that are coming out of their paycheck. So we're going to add all this messed together. So let's do this in a fully not sassy way, right? So plus 9 plus 8.7 plus 37.2 plus 28.4. We get 343.3. So $343.3. That's the weekly deductions. I think I made a mistake there, to be honest. That seems a little high, but let me just double check my work here. So, oh, that's why I put a 269 there. Whoops. So let's fix that there. That's much more reasonable. 100.3. That sounds a lot more like it. So $100.30. Actually, I think I missed that 9 there too, didn't I? Let me just double check again. Oh my gosh. Okay. So let me try again. 26. Ah, technical troubles here. Stay with me. There we go. 26. Insert. Sorry. Insert. Plus 9 plus 8.7 plus 37.2 plus 28.4. Okay, there we go. 109.3. Finally. All right. That was my bad there, folks. Sorry about that. So let's try this again. That would be 109.3. Whoops. 109.3. So here we go. Come on, come on, come on. There we go. So 109.30. There's my total deductions. Now it says what's her week home, or what's her take home pay each week. So 600 minus 109.3, and we get 600 minus 109.3, we get 490.7. So $490.70. So that is how much she's going to pay. So she's going to make $600 in that week, but she's only going to take home $490.70 because of all these deductions here. Um, so again, we're doing nothing new. We're just kind of tying all our old stuff in one problem rather than doing them separately. So let's try this again with this person. So they're a baker. They earn $1,800 a month. We have her standard fit, Social Security, and Medicare. She has, again, these are some kind of deductions that happen quote unquote randomly. So she has another $30 for insurance and then another $45 for charity. So she's obviously donating some of her money to charity, which is fine. Luckily, she has no income tax, so we want to figure out what her total take home pay each month would be. All right, so let's go ahead and write down what we are going to deduct. So we have fit, she does pay that. We have Social Security, we have Medicare, we have health, and then we have charity. So we'll put C here for charity. All right, so let's go ahead and figure these out here. So it says that she's single and claims one allowance, and she makes $1,800 a month. Now, unfortunately, the federal tax federal tax tables are for weekly payments. So what we have to do is figure out, okay, if it's 18 a month, how much is that in a weekly manner? So we're going to take 1,800, and we're going to divide it by 4 because there's 4 weeks in a month, typically speaking. So let's figure out what her weekly payment would be. 1,800 divided by 4 would be 450. So we're going to look at the 450 column in the federal income tax tables. So single, which again for Jeffrey would be on page 82 if you don't remember. Ha ha ha. 450, it'd be down here. So it's the 450 to 460 table. And one allowance would be over 2, so that'd be $44 for her federal income tax. $44. Remember, make sure you're looking at the single table, not the married table. And then Social Security is that 6.2%, so 1,800 a month. Or sorry, again, this is the weekly tax. So remember, we're going to have to times this by, let's see, 4, because again, we're figuring out how much she's going to take home each month. So I forgot to do that. So this is the federal deduction weekly, 44 times 4 to get her monthly. So 44 times 4 would be 176. So again, this is what we have to do to modify this compared to the last one because she's making it per month, but federal is done by week. So we had to do a little bit of math here to convert this into a monthly deduction rather than a weekly deduction. So just that's why we have this little extra step here compared to what we did before where we didn't have that extra step because it was already in a weekly mode. So again, paying attention to the time frame is important. So we take this times 0.062 like we normally do. and we get this result here being as not sassy as possible, although every time I say that my text starts to cause me issues, so maybe I should stop saying that. Times 0.062, 111.6. 111.6. Medicare is that flat 0.0145. So we do that. 1800 times 0.0145, 2628. Okay, so 2628. And then health insurance is just a flat 30, and charity is a flat 45. So that's her monthly deductions. Let's go ahead and combine all this together. So we have 176 plus 111.6 plus 26.28 plus 30 plus 45, and we end up getting 388.88. So 388.88. And so now we go ahead and deduct that from the pay, 0.88. So again, this is her total gross pay. This is what we're getting deducted. So then we're going to figure out what she's going to be left with. So 1800 minus the answer, so 388.88. And we get that she's going to take home about $14.11 and 12 cents a month. So $1,411.12 each month. Okay? That's how much her total net take-home pay is. So again, take-home pay is what they refer to as the pay you get after you've paid all your deductions. And again, it's not too bad of a problem there to solve. It's a little bit weird at first, but we get the hang of it eventually. So, conversely, you could convert this into a weekly pay and then just do all this stuff here and then times it by 4 at the end. That'd be another way to do it, is to convert 1,800 a month into a weekly payment, which we just said was 450, and then do all the stuff with the 450 payment, and you'll get a similar result. Maybe not the exact same, but a similar result. So, all right, let's try to do this one more time here with a little bit of a tougher problem. So we're going to kind of go from very bare bones here. So we have this person who works on an hourly basis and it's paid time and a half overtime. Um, they get a base rate of $15 per hour. Okay. They're single with one allowance. They pay Social Security, Medicare, and state. Medical insurance costs $8,000 and $500, and his company pays 75% of that. He works a 48-hour week. What will his take-home pay be after deductions? Okay, that's a lot of stuff there. So let's go ahead and try to tackle this here. So uh, now notice here they didn't say anything about the federal income tax, unfortunately. So we are going to assume that he does pay a federal income tax. I just forgot to mention it in there. We first need to figure out how much he's going to get paid. So he works 48 hours in this week here. So let's figure out how much pay that is. So $15 per hour and time and a half overtime for anything over 40. Okay, so that means he's going to get his, if we go back to chapter 1 here, he works at least $40 an hour, or 40 hours for $15 an hour. So 40 hours for 15 an hour. Plus, now for the overtime, remember the overtime is the amount of time he works overtime. So 8, because that's 48, so 8 hours overtime, times his normal pay rate times the enhancement. In this case, time and a half means we're going to times it by 1.5. So again, standard time, 40 times 15, overtime, right? So we're going to combine these together. So 40 times 15 plus, and we go 8 times 15 times 1.5, and we get 780. So that's how much take-home pay he's going to get, is $780. I'm take this is gross pay, sorry. His gross pay is $780. That's before any deductions. So now we need to figure out all the deductions. Now this is a weekly payment because it says it's 48-hour week. So we can go and use the federal income tax tables. So let's see here. He is single with one allowance. Let's go to our A4, A2, A3 tables. So single tables, which would be on A2 and A3, I believe, if I can get there in the book. There we go. And let's see here, 780. So if we look down the side there, that's going to be in the 780 column. So 780 to 790 for one allowance will be 101. So they're going to pay 101 in federal tax. They say that the state income tax is 4%. Okay, so 780. times 0.04 for the state tax. Let's go ahead and solve that out here. So 780 times 0.04 be 3120. Excuse me. Social Security is at 0.062, so 780 times 0.062. Go ahead and do that. 780 times 0.062. We get 4836. 4836. Medicare is the 780 times 0.0145. And then we go ahead and plug that in here. So 780 times 0.0145. Get 1131. And then insurance, let's see here. Now this is where to actually calculate the insurance. So it says the insurance is $8,500, but his company pays 75% of that, which means that he's going to pay the other part. So he's going to pay the 25% that the company does not. So let's, for insurance here, let's do 8,500 times 0.25, because again, he's paying only 25% of the cost. The other company is paying 75%. So 8,500 times 0.25, which gives us 2,125. Now you might be saying, well, this is a lot because he's only going to get paid $780. But remember, this is a yearly payment. Usually health insurance cost is given as an annual amount, although I didn't say that here, which I probably should have. So this is $8,500 yearly. So we're going to divide this by 52 to get the weekly payment, which is going to reduce this substantially. So this divided by 52 gives us $40.87. So that's a much more reasonable weekly payment than $2,000. Okay. So we're going to add all this deduction stuff together. So let's go ahead and go here. Let's see here. We're going to do fit first. We're not going to throw a fit. We're just going to calculate it, right? Boom. 48.36 plus 11. Whoops. Plus 1131. There we go. And then that's weird there why they split that, but okay. And then plus 4087. Now, so add those together, we get 232.74. So 232.74. And so then we're going to say, okay, that's his total deductions. Now we're going to take that away from 780. So $780 that he makes minus the 232.74 in deductions. And let's see how much he ends up with. So 780 minus that, and we get $547.26. So $547.26. So that was probably one of the longer problems, obviously, but it took just a little bit of brain power. And again, that's just it's nothing quote unquote new, but it is tying everything together here. So yeah, that's uh, again the hardest it will get usually, and it's all stuff we've done individually. We've done fit, we've done SIT, we've done Social Security, we've done Medicare, we've done insurance. It's just doing them back to back to back. It takes some time, takes some getting used to, but again, that's why we practice. So one last thing here before we go, and that's just a quick review on the graduated tax, because I saw that this was a problem that was missed a lot on the RPS, especially you, Jeffrey. So we have this person who earns $8,000 in income and is in a state with a falling tax rates, right? So the first thing we're going to do is, if it's a graduated tax rate, we're going to take that $8,000 in income and we're going to parse it out bit by bit. So the first thing we're going to do is take out $1,000. So minus $1,000, we have $7,000 left. Where does that $1,000 go? Well, it goes right here at the 2% rate. So $1,000 times 0.02. Okay. Then we have the next 2,000. So we're going to take out 2,000 more, get 5,000 left. That 2,000 goes with the 4% rate. So 2,000 times 0.04. Then we're going to take out 3,000. So we're going to subtract the 3,000, and we get 2,000 left. That 3,000 is going to go right here at the 6% rate. So 3,000 times 0.06. Now we have 2,000 left, but the next limit here says the next 4,000. So up to $4,000 can go in this little tier here, this little step here. but I only have 2,000 to give. So what's going to happen is that if I don't have up to the maximum amount, I'm simply going to take what I do have and put it in that bracket. So $2,000 times 0.08. So again, if you run out, quote unquote, of money, each bracket, you just put whatever you have left, it gets in the very last zone. So if this was like $1, it'd be $1 taxed at 8%. So again, this is every dollar up to 4,000 and past 3,000 gets shoved into this tier here. So I actually don't reach the over 10,000 tier. I don't get down there because again, I don't have enough money to get taxed at 10%. I just stop wherever I end up with, and that's right here. I don't even make the full 4,000. I just get the 2,000 in there. So again, it's whatever money is left over. If you can't get to the next tier, it just all gets pushed into the tier that you're on right now, and you get taxed on there. So we're going to solve each of these problems and then add them up, right? So let's go ahead and do this multiplication bit here. So 1,000 times 0.02 is 20. 20. We do the same thing for 2,000. So 2,000 times 0.04, get 80. 3,000, let's see here, 3,000 times 0.06, get 180. 180. And then lastly, 2,000 times 0.08, we get 160. So now we're going to add all these together, and we're going to figure out what the total tax is. Excuse me. 20 plus 80 plus 180, whoops, 180 plus 160. Whoops, forgot my zero. Caught it this time, so ha ha ha. And we get 440. So their total tax is going to come to $440 for their state tax. So again, the reason we missed this one there is that usually when people got to this last step, they put a 4,000 here rather than a 2,000 essentially, because again, they thought that, okay, well, if this is the next 4,000, that means I have to use all that 4,000. That's not the case. This says up to 4,000, not always equal to 4,000. So again, whatever you have left gets shoved into the last tier, but you don't necessarily have to use the full amount of that tier um, if you don't have enough money to fill it. So if I had, $3,999 left over after I subtracted, then $3,999 would go in this 4,000 tier, and that would be that. So again, don't think you have to always use the maximum number each time. So that's it for this video. Hope you enjoyed it. I look forward to seeing you guys tomorrow, seeing you guys and girls tomorrow. And if you have any questions, let me know. So hopefully you enjoyed this SAS free video, and have a good day. There we go.